I actually got quite a lot of messages in my inbox saying, Clive, well, I was in China, this was, saying, we were already in China when it soared up above 4,000. And then the messages came saying, Clive, what's going on when it plunged? And I couldn't reply to everybody, but I think the gist of it was that weak holders were suddenly getting very nervous and they see the direction of travel and say, oh my God, it's on its way back to zero or whatever whatever the number they got in their head. Um, no, I've been around markets for 50 years, not just gold, but equities, everything under the sun. And this is the way bull markets behave. They climb a wall of worry.
Friday, October 31st, 2025, Maneco 64, home of alternative economics and contrarian views. So Clive hasn't gone away. He's back from China after 3 weeks. Welcome back, Clive.
Thank you very much, Mario. Yes, it was a fascinating trip to see how things are in China. I can tell you, I didn't see any sign of recession. The shops were full. And if you go to the shopping malls, it's all Western names, every Western name under the sun that you can imagine, but not one person speaks any English.
I see. Before we continue, do you want to show us? I've got a map here where you were in China. I mean, it's such a big
Sure.
country. Here we go.
Right. So on your map, I probably can't point on it, but if you look on your map and you go to, you can see right in the center, Chengdu,
Yeah, right there.
right in the center. And we had a week in Chengdu, and before that we had a week in a place a little bit north of Chengdu. It might be an hour and a half away, which you can't see on the map, called Deyang.
Yeah,
So Deyang is a city of 3.5 million people.
yeah.
So tiny city really, and Chengdu has got 20 million people, 10 million cars. They've got so many cars that you're not allowed to drive your car into town unless you have a certain number plate combination. So certain numbers are even numbers allowed one day, odd numbers the next day, and so on. So what I discovered is that large numbers of people in China and around the Chengdu area in the outskirts, because don't forget this is a huge city, so you probably drive for an hour and a half to get into the center of town. A lot of people own two cars just for the purposes of getting around the number plate system, which is designed to stop too many people getting into the center of town.
Yeah, that's very interesting. And are the cars there kind of mostly electric now because they're big into EVs, aren't they?
Yeah, we can tell the difference between the electric cars and the gasoline cars. The electric cars have green number plates and the gasoline cars have blue number plates. And I would say it's 60 something percent electric is my estimate at the moment. I certainly saw more green number plates, meaning electric, than I saw blue.
Yeah.
But the trend definitely is in the direction of electric.
I see that it's not too far from where the terracotta warriors are. That's a real, have you ever visited that? That's a really interesting
We talked about it. It's actually several. It'd be many hours away,
yeah.
even by the high speed train. So for various reasons, there was a medical emergency while we're there. We decided not to go.
Yeah. Where did you fly into, Clive?
So that was quite interesting. First of all, I flew to Shanghai, and then I flew from Shanghai to Chengdu. So that's about the Shanghai to Chengdu is about 2.5 hours. So you see, Shanghai is on the right-hand side of the map, not too far from Hong Kong, I guess. Well, I suppose it's too far. It's a long way from Hong Kong, but we flew to Shanghai and then flew from Shanghai to Chengdu. What was quite interesting, I made this trip from Shanghai to Chengdu maybe 12, 13 years ago. It was interesting because for the first time, well, this time we had at least one stewardess who could speak English. It wasn't the case on my earlier trip 12 years ago. And the mentality is very strange. The stewardess is going through the cabin and she's asking everybody in Chinese, would you like meat or fish? And everyone who said meat got a dish, and everyone who said fish, she said, I'll come back later. And then about 3 minutes later, she'd come back to the person who said, I want meat, and say, sorry, we've got no fish, no meat. Would you like the fish instead? And she'd hand them the fish. And this went on. I thought, well, she knows they got no meat. Why is she still offering everybody the choice between meat and fish? I mean, it was just so weird. But I think it's they're supposed to offer a choice, even though they don't have a choice.
That's interesting.
And so she offered me, and I said, "Well, I'll have the meat," knowing full well they don't have any. And she said, "I'll be back in a minute." And then she came back a few minutes later and said, "We don't have meat. Would you like the fish?" I said, "I don't like fish. I'm allergic to it." She didn't understand that, but eventually she said, "I'll bring you something else." So about half an hour passed, and eventually after an hour, she brings me these dried biscuits. But it was a funny flight because they didn't have any coffee, they didn't have any Coca-Cola on the plane, they didn't have any beer, they had juice and water.
All right. Clive, when you left, was it 3 weeks ago? Where was gold trading?
I think it might have been. I might have left 3 weeks ago, but I think possibly we had a week when I couldn't meet for another reason. But it was certainly well below 4,000, and we were talking about it might get to 4,000 this year. I have a guess it was about 3.7, but
Yeah.
we'd have to go back and check.
So a lot has happened to the price of gold, but before we get into that, maybe you could tell us about gold in China, whether the Chinese like gold or not, or whether they're not awake to the great power of gold as an insurance, financial insurance.
So I asked those with whom I could communicate either in English or via translation. And broadly speaking, the view is that the gold price is too high. That was across the board. Having said that, I was certainly in Chengdu. There's lots of gold shops, and these are enormous places. They're like multi-story, very high, and everything of the shop is made of or looks like it's made of gold. Bright and shiny. I can show you a picture of one here, for example. If I can just share. Let me see how to do that. Give me a second, Mario.
Yeah. So it's just like in the UK, all the gold shops. I'm kidding.
Yeah. So and they what was quite interesting was they had outside every single shop some girls dancing. Do you see the picture now?
Yeah, yeah.
So I don't know if you can see the girls dancing on the left-hand side.
Oh, I see. So they're trying to lure the
I'll stop that
customers.
one.
Yeah.
That's right. And so they had on another one they had the face changing show, and so everywhere you went where there was a gold shop, it was huge. It was brightly lit. It was coloured in gold everywhere, multi-story. On the quite often on the balcony above the shop, they would have people, girls dancing, or they would have they call it Bien Lien, which is the face changing show. I don't know if anyone's ever seen that, but this is where the actors have a mask, and then with a flick of the head, instantly the color of the mask and everything changes. Then they flick the head again and it changes, and it's impossible to see how it's done. And it's a national secret in China. The Chinese government has warned that the people who know the secret must not share it with foreigners.
And Clive, what kind do they sell? Bars, jewelry, coins, everything, yes?
Yes, indeed. I'm going to show you a picture here of a gold bar that I nearly bought, and I'll tell you how it works. So just let me share that too. There we are. So that's just an example of one which I didn't buy, but I nearly did. I think, can you see it, Mario?
Yeah.
Yeah, it's a 50 gram, I think it's a 50 gram bar. I'd have to turn it over to see the weight. The way it works, on every item, they have a price which is called the labor cost. And to calculate the price that you're going to pay for the item, you take the latest gold price, which is often on the wall, So they'll have it displayed somewhere, which I checked. And when I checked the gold price, it wasn't that much higher above the gold price. It was, 2 or 3, 4% above the gold price. So you take the gold price, you add the labor charge per gram, and then you multiply the total of those two by the number of grams.
Interesting.
So net, you end up with a price very, very roughly about, for a decorative item, for a decorative item, you end up with a price about 13% above the free market price.
I see. So it's fairly high premium, but like you said, it's not a coin. So Clive, yeah, are you? I was surprised 2, 3 weeks ago. I don't remember now exactly. I think it was October 16th was when gold topped at 43.80, and that was on a Friday. And I remember speaking on my video that that week I had lost track of the gold price because it went from 4,000 the previous week to 4,400 or 4,003, was it 4,380? And I said, this is just very quick. So I'm not surprised we had that big correction. But I think as I look here this morning, Clive, gold is at 4,020, and silver, interestingly, a few days ago, it got down to like below 46, and it's now at 49.11. And I was looking at the monthly chart going back a long time. The highest closing monthly level for silver is 47.90. So if we can stay around here till the end of the day, this will be the highest monthly closing. So I think this is just shaking the week longs, and I think a lot of the speculators on in the futures and over the counter markets got overstretched, and they've gotten taken to the cleaners. Is that how you see it?
There were a lot of people who came in quite late in the day and bought gold with leverage, and obviously, when you have that type of situation, even a small move down can shake them out because they get scared very quickly. So I actually got quite a lot of messages in my inbox saying, "Clive," well, I was in China. This was saying, we were already in China when it soared up above 4,000, and then the messages came saying, "Clive, what's going on?" when it plunged. And I couldn't reply to everybody, but I think the gist of it was that weak holders were suddenly getting very nervous, and they see the direction of travel and say, "Oh my God, it's on its way back to zero," or whatever whatever the number they got in their head. Um, no, I've been around markets for 50 years, not just gold, but equities, everything under the sun. And this is the way bull markets behave. They climb a wall of worry. They go up, up, up for weeks on end. Then suddenly you have a ratchet down, and it's short, it's fast, and it's furious. And then a lot of people think, wow, it's going to nothing. They sell, and then it bounces. And then you have a little period of consolidation, which you can't say that it lasts a week or a month or 3 months. There's no rule here. But there's nothing to say that the bull market in gold and silver has been broken yet, not at all. But it doesn't mean to say that we're not in this consolidation phase where we might go sideways for a period. But of course, that can change. It depends who comes in as buyers. I did notice something, Mario, which I just draw your attention to, and I don't know if anyone can crack it because I can't figure out what's going on. But I've been looking at the COMEX numbers, and there's something very odd going on, which maybe someone can solve it for me. But I see that gold is moving from Brinks and from JP Morgan to HSBC. So if I go back to March this year, Brinks had 13.8 million ounces in COMEX, and JP Morgan had 8.2 million ounces. Brinks has gone down from 15.16. So Brinks has gone from 15.2 million down to 11 million, and JP Morgan's gone down from 8.2 million to 7 million, 7.1 million actually. But at the same time, the gold held by HSBC, which was 5.9 million, has gone up to 7.25 million. So although the gold is staying in COMEX, it's changing hands, which is you've got to ask who are the clients of HSBC on whose behalf they're holding it. And we know it's changing hands because we're seeing these delivery notices every month, month after month, without exception. If you give me a second, I'll show that to you, Mario. The delivery notices are many multiples of what they were last year.
Yeah. I'm looking here, Clive, at Gold ETF custodian, and it says that the primary custodians for gold ETFs are large bullion banks such as HSBC and JP Morgan Chase. So I don't know, maybe HSBC has to source some gold for ETFs. I'm not sure.
It could well be that they're holding it for ETS, but it's strange that the gold has moved from other owners,
Yeah.
Brinks. I mean, they're obviously custodians for third parties, Brinks and who was it? I forgot. Brink. So it's moved from JP Morgan and Brinks to HSBC. So somehow, maybe HSBC is one of the custodians. I don't know
Yeah.
whether the custodian for the ETFs.
You told
Now,
me before we started that the is it November gold and silver that you're already seeing people setting up for delivery, even
yes, let me
though
show you. Let me share that with you. You can now see on the screen the COMEX gold delivery for 2024 in the left-hand column and then 2025 in the right-hand column. So the delivery notices for November, and don't forget we haven't even started November yet, so that people have been giving the delivery notices today or yesterday for the 1st of November. Delivery notices for November already exceed the totality of the delivery notices for the whole of the month of November last year. And that's true for both gold and silver, which you see on the right-hand side of the screen. So what does it mean? It doesn't mean to say the gold is leaving COMEX, but when a delivery notice is given, it means that one owner is accepting to, or one owner's asked for delivery, it's changing hands to a new owner. So the new owners are keeping their gold in COMEX, but they've asked for delivery. So basically, the ownership of gold is changing a lot, much more. Because in the past, it was like 1% of the contracts would be would be going for delivery notices. In the month of May, we had 100% of the open contracts for that month were basically delivery was taken, and we're seeing typically now something like 20 or 30% of the contracts open being delivered. In other words, ownership is changing. We don't know from who or to who, but maybe someone can crack it for me. But there's some rotation going on there.
and also delivery doesn't mean to say, like you said, it just changes hand, but when it leaves COMEX, you need to get a warrant issued, right? That's how it leaves COMEX. But Clive, I made a video. I think it could have been yesterday or the day before because I have a source that someone I worked with who is retired, but he used to work broking. He was a government bond broker, cash market for a lot of central banks, and he told me because he still has contacts there that the major central banks in the Middle East, think Saudi Arabia and UAE and also even Korea, they've all been buying gold, physical gold, not COMEX gold, on this dip that we've seen the last 2 weeks, and they're buying hand over fist. So I think the central banks are taking this correction as an opportunity to load up.
Well, I think there's a lot of central banks who say, does it matter what the price is? We can just print the stuff,
Yeah,
and
but they'd rather,
direction of
of
travel.
course, they'd rather pay 3,900 than 4,300. But anyway, Clive, there's another topic here. I don't know if you've seen this. I'm going to bring this up. I'm going to share it with you. I saw this yesterday, and it's from just Dario. He's based in Hong Kong. I've interviewed him before. He's an Italian guy. He's a macro analyst, and he's pretty good. And he says, folks, U.S. banks reserves are literally in free fall. The level is now the lowest in the past 5 years and far below where U.S. regional banks crisis started. Beware, banks are one of the engines of the stock market, and currently stocks are flying high with an engine on fire. And I mean, I'm not a banking specialist, so I use Chat GPT, Clive, and I asked the question, what do quickly falling bank reserves signify in terms of a bank's health? And it says when a bank's reserves, cash and deposits it holds at the central bank are quickly falling, it's often a warning sign, but the specific meaning depends on why reserves are dropping. Here's what it generally signifies. So, potential warning signs. Liquidity stress, most concerning scenario. Rapidly falling reserves may mean the bank is using its most liquid assets, cash and central bank deposits, to cover withdrawals, loan losses, or funding outflows. Indicates customers or counterparties are pulling money out, forcing the bank to draw down reserves. Can precede liquidity crises or even bank runs if the trend continues. It also says reduce access to funding. If a bank can't easily borrow from other banks, it might deplete its reserve to meet obligations, so on and so forth. And Clive, we've also seen, where is it? There's another story that's been going on. Oh, it's here. I'll bring it up. This one here, Fed's standing repo. I've got all these adverts. Fed standing repo facility hits record high as policy meeting outcome looms. So the banks are starting to use the Fed's repo facility instead of trading with each other. So yeah, had you seen that? And what do you think about this?
I hadn't seen that specifically, but what I did see, it was probably about a week or two ago, was a couple of regional banks unexpectedly reported that they were experiencing losses over and beyond normality, and that could indicate or could be an early sign of cracks starting to occur in the lending market. We haven't heard anything from the large banks yet about bad debts or nothing significant. But if regional banks are starting to suffer from losses, it begs the question, is this a one-off with a couple of regional banks, or is it something which is more of a systematic problem where we're going to hear more and more about it in the coming weeks? But yes, it is when you see these numbers changing like that, it's indicating fragility in the system, and lower reserves, I would say, typically with a third thing, which you didn't read out, Mario. Typically, it's because they are writing down the value of loans. They're making a provision for bad debts. So that would be the most common reason, in my view, why reserves of a bank would be dropping.
Oh, because they're repricing their loans and that shrinks their reserves, right?
Exactly. If you make a provision for bad debts, that reduces the profit, and the profit is part of your reserves. So that's what I think is going on. And that was the third thing in your
Yeah,
ChatGPT
let me
results.
bring it back up. Where is it? Number three. I'm gonna share it again. Yeah, poor asset quality or loan problems. Falling reserves can occur if a bank must write down bad loans or cover defaults, reducing available liquidity. Yeah, and we've heard, Clive, all these subprime auto loan problems as well. A lot of commercial real estate that hasn't improved. So yeah, I think we need to really keep an eye on this. And despite that, Clive, we're seeing the stock market make melt up to new highs. I think yesterday we corrected a bit. What do you think about the AI situation? Because apparently in the second quarter, GDP growth in the US, half of it basically was due to AI expenditures in their data centers.
Um, well, AI is a two-pronged fork. You know, there's the good and the bad of it. This morning, I was taking a walk with the employee of a very large firm. I won't say the name of the firm for confidentiality, but a very large. I guess they got 500,000 employees worldwide. I'm just guessing. Maybe it's 300,000, 200,000. He said that they are quietly getting rid of 15% of their staff. They're not announcing it publicly. But they are shedding. They're in the middle of the process of shedding staff, and it'll be about 15% of the workforce in total. And the reason is that some people are becoming more efficient than others because of AI, and therefore some of the people who are not efficient at AI are no longer needed.
Yeah, I've got something interesting here. Someone posted on X, I think it was yesterday, about this phenomenon. So here we go. Recent layoff announcements. UPS 48,000, Amazon 30,000, Intel 24. And it's from Simon Dixon. He's like into the crypto space, and he says you cannot bury your head in the sand. Those creating the AI and robotics will lay off and automate first, then they will make what they use available to all businesses later. Nothing stops this train. Most likely, the job you rely on today won't exist in 5 years. So that's pretty. It's concerning for people who are have jobs with big companies, I think.
Well, it's exactly the point. I mean, my world is a world of investments, and I publish every now and then, just for a bit of fun, on LinkedIn, what's called an investment report. Now, that report would have taken, if it had been written by human beings, would have taken a day and a half to write and format and everything else and gather the data. I now do it in 30 minutes or 40 minutes with AI. When I say I do it, I drop the instruction into AI. It's a beautiful document. It's well formatted, got all the information you could possibly need. It's got colors, it's got pictures, it's got a risk warning. All the data is up to date and the prices are correct, and it's got views and discussions about what's going with the Federal Reserve. You know, it's a really, really good and useful document. But all I have to do is drop the prompt into AI, go and have a cup of coffee, come back 20 minutes later, and it's done.
Yeah. What about in terms of the stock market? Like AI is like pushing the stock market higher. The Mag 7 are like really leading everything. And I saw someone, and you're good at this, Clive. I saw someone noted that the price to sales ratio of Nvidia is over 30, which is massive. Do you think? Yeah, I'm not like saying AI is a, well, it could be a bubble, but it could be like a dot com in the 90s. It doesn't mean the internet went away and AI will go away. Do you think the market has, yeah, kind of gotten ahead of itself?
So I'm not a shareholder in Nvidia. Don't intend to buy any because I think it's a little bit ahead of itself. But what I can say, you know, for those who are saying I'm a bearer of Nvidia, there's two sides to every story. Nvidia has a very strong moat. Many companies who use their products, their chips, have invested a lot of time and a lot of money in training, in software, in development, in data centers, which use Nvidia chips. It's extremely hard to change from one provider to another. That's a very costly and time-consuming exercise. Having said that, on the negative side, some of their biggest competitors, not competitors, some of their biggest customers, which include names like Google, Meta, Amazon, and others who are using the NVIDIA chips, are also building their own chips, which may not be specifically competitors to NVIDIA, but they'll be sitting alongside NVIDIA doing what NVIDIA's chips aren't doing or can't do because of the supply constraints at the moment. But it's only a question of time before these large companies, which are also producing AI chips, start to get into a situation where they are saying, we don't need to rely on NVIDIA's chips quite as much. And then we have a growing number of players in the market. So there will be, down the line, a lot more players in the market, a lot more supply than we've got today. I mean, supply is tight on these types of
Yeah.
chips. But there'll be more supply, and that probably means that the future growth expectations, whilst they'll still be high, they'll be coming off a little bit. And what that means is the price earnings ratio of companies like Nvidia will come back. So even though the earnings go up, the price earnings ratio comes down, and you might find even with higher earnings, the price of Nvidia shares stops rising and quite possibly goes down, not because the earnings are going down, but because the PE ratio is contracting from where it is to a lower level, a more normal level.
Yeah, I want to switch over to the debt situation. So, Clive, since yeah, you were in China for 2 weeks and you got back, the debt problem hasn't improved. The U.S. national debt is gone above 38 trillion. And I had Francis Hunt on for an interview actually, and he noted that the Fed found out, surprising for them, that the biggest holder of U.S. Treasuries, foreign holder now, is the Cayman Islands with $1.8 trillion, and they're using this for basis trades, which is highly leveraged, and basis trade in the bond market, like where you sell the future and you buy the cash bond, right? And they do that highly leveraged and in hundreds of billions at well, 1.8 trillion through the Cayman Islands. So it comes out as there's a foreign demand for treasuries, but the Cayman Islands only has a GDP of 8 billion. So it's not really the Cayman Islands.
Yeah, I got to laugh, Mario, because I worked for 3 years in the Cayman Islands. This would be about 40 years ago, something like that. And back then, the Cayman Islands was also one of the biggest holders of treasuries and Eurobonds. Nothing's changed. But the funny thing was, we had this non-stop stream of brokers ringing people up in the Caymans, including myself, saying, "Would you like to buy Eurobonds? Would you like to buy treasuries from us?" And I thought it was funny because we'd never, in the 3 years, nobody I knew had ever bought a treasury bond or a euro bond. But one day I happened to have a client who had a trust fund and we needed to make an investment. So I said, okay, give me, I'll give you $50,000 of this. I think it was a euro bond, and the broker who rang me was completely disgusted because we're supposed to be doing trillions, but the trillions are not really there. I mean, yes, technically those trillions were all in my drawer. I mean, not I don't say my drawer, it's my boss's drawer. But when I say they were in the drawer, the way it works is all the big international banks like Banco do Brazil and other banks, Bank of New York and Barclays Bank, well, Barclays was in the Cayman, but the banks which are not in the Cayman Islands, they would have a legal branch in the Cayman Islands with a legal managing director, which was my boss, and pay, I don't know, $30,000 or $50,000 a month to the Cayman Islands government, in return for which the books of the foreign branch, or i.e. the Cayman Islands branch, would be kept in the Cayman Islands. So every month, London or Sao Paulo or wherever it was would send to the Caymans the accounts, and they would be retranscribed in the Cayman to make the books of the bank in the Cayman. And there'd be a plaque on the door with all the names of the bank. We had about 20 or 30 or 40 banks on the door of our bank. But none of them were really physically there. Yes, technically they had a managing director. Technically they had a set of accounts there, but there was no cash desk. There was no customers there. The customers were all somewhere else. And the reason they did it through the Cayman Islands was because if they did it locally, there were local taxes like stamp duty and income tax and trading tax and all kinds of things.
I think what's happening now is slightly different, even though it was interesting what you said there. And because this basis trade, so it's providing like demand for U.S. Treasuries, but a basis trade is very risky. The margins are tiny and it's highly leveraged, and they're hedge funds. And some people might think, well, that's just Francis and you talking about it. You guys are conspiracy theorist, or you're alternative, but The Gnome of Zurich, the guy I met last year at the Precious Metals Conference, he sent me this. It's in German, but I can like figure it out a little bit. And it's from the newspaper, the Neue Zürcher Zeitung, which is a very respected newspaper in Zurich. And it says the risk from panic selling rises. And it says hedge funds from the Cayman Islands, they're the biggest foreign holders of US Treasuries. And they actually mention the group chief investment officer for Schroders. They're a big fund manager from London. They've been around for 200 years and they manage like over $1 trillion. And this lady, Johanna Kirkland, she's saying it's a problem. And they even mention here, Clive, the 1,839 milliarden dollars, which is basically 1.839 trillion. So maybe, we talked earlier about the reserves falling off, bank reserves. We've also talked about the fact that the Fed's repo facility is being used more. I think that it's been used the most since COVID, even though the use is still quite small. So maybe this could be like a black swan out of left field that could trigger some liquidity problems. And I would say, Clive, the hedge funds, who lends money to these hedge funds? It's the primary brokers, right? People like J.P. Morgan, Goldman Sachs, HSBC.
Yeah, I mean, it's a risky situation, and if it goes wrong, the Federal Reserve will have to step in with new lending facilities to try and stabilize the markets, as has happened in the past.
Do you think that's why they're going to stop QT, or that's a different story?
Well, I think that's a different story. I mean, by stopping QT, they're basically ceasing to withdraw money from the market, and it keeps the gravy train of every asset going higher. I mean, when they were doing QT, what that was doing was basically they were selling bonds that the Federal Reserve owned into the market and collecting the cash. So they were taking cash out of the economy, basically slowing the economy, if you like, in a certain sense. But now, without that withdrawal of cash, it means the cash in the economy will build up and people will buy things, and that's why I think the gold prices has gone back up from that recent dip.
Yeah, and the other thing as well, if they want to do QE, it's much easier to start it after you've stopped QT. And it's interesting that I heard Jay Powell speaking the other day, and he said they got their balance sheet shrunk by just over $2 trillion, which is fairly similar to this 1.8 trillion dollars of treasuries in the Cayman Islands. So I'm gonna stop here, Clive. And yeah, just anything you wanted to tell the viewers before we sign off?
Well, I think there's a lot of people who are quite nervous about the swings in the gold price. If you don't own any, then I think the way to play it is buy a little bit and see how you feel, and then keep lots in reserve to buy another day. And it doesn't really matter if you buy higher or lower than today's price. That's not the important thing. The important thing is to get to the amount that you'd like to own in the end, little by little, and then you have to just keep it for the long term as kind of like an heirloom. It's your parachute. It's your emergency money. You know that it's not going to. It's not like unlike your bank. It can't default on you. You don't have to ask gold for permission what you do with it. Whereas you want to move money in your bank. If they say you can, that's fine. If they say you can't, you can't. But if you've got the gold physically in your pocket or under your pillow, or wherever you keep it, you can everywhere on the planet. You can trade it. There's no one going to say no to you if you try and sell a gold bar or a gold ounce.
I agree. And I noticed, Clive, that when you got back from China last week, you went to a coin conference in Zurich and that you loaded up on some gold and silver, didn't you?
Yeah,
So,
I did. I did. I bought about 10,000 pounds worth, I suppose, of gold coins of various descriptions, mostly British sovereigns, as it happened. And I felt very pleased with myself because a lot of people who were selling gold and silver had fairly good prices. You always pay a little bit more than the gold price, but there was a lot of choice, lots of good prices, and I got myself one. It was a silver. I got one of the pieces which I really like. That's my favorite. It's a silver bar from the Cook Islands. Beautiful piece. I paid 60 Swiss francs, the price on the thing, and it's 50 grams. So anyone who wants to do the maths can work out. I didn't pay much.
That's 1.6075 ounces, just to let you know. So,
Yeah.
yeah, so I guess
But
it's a good price, 60 francs.
I mean, for the beauty of it, definitely.
Yeah.
I mean, this is the other thing. Those who do buy gold, you stop concentrating on the fact that you buy it at one price and you sell it at a lower price because there's always a difference between the buy and sell price. What you have to concentrate on is you are buying something which might be very useful to your family and to you down the line. It's a bit like buying an umbrella before you need it.
Yeah,
You know,
yeah,
the day is going to come.
focus on the grams, ounces, and kilos if you get to that much. Anyway, Clive, it's really nice to have you back, and we'll be actually doing the live stream on Sunday. So I want to wish you a great weekend, and I'll talk to you then.
Thank you very much, Mario. And just, maybe I should mention a very important point, and I did a video on it last night. Pensions are about to change. If you look at the video, there's a big change potentially coming in the budget coming up in a couple of 2 or 3 weeks. So people need to think about what they should do
Yeah,
before that.
in the UK, Clive means. Yeah, and
Yeah, the UK pension.
they should consult, I think, with their financial advisors. Anyway, take care.
Great. Thanks very much, Mario. Bye bye now.
Bye.